morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, March the 7th. Well, mostly quiet, lower trade across the ag space overnight as prices slip back from yesterday's rebound. Wheat is a downside leader right now, down about 7 to 9 cents, let's call it. Corn is steady to a penny lower. Bean complex is also steady to slightly lower across the entire complex. Market just seems a little bit tired from the back and forth on trade tariffs with Canada and Mexico. Speculative traders, they were large buyers across the ag space yesterday as President Trump pushed back the tariffs on imports from Canada and Mexico that fall under the existing U.S. MCA agreement until April 2nd. We had speculative traders buying nearly 28,000 corn yesterday, 14,000 beans, 8,000 meal, 6,000 in the wheat, and 3,000 in the bean oil. I would look for this afternoon's CFTC report to show money managers long position in corn down to falling about 80 to 100,000 contracts for the week, close to still somewhere in the range of about 240 to 260,000 contracts long. I'd also expect to see money managers flipping around back to net short soybeans after holding a brief net long position. Yesterday, we had both our weekly export sales and the census export data from January. On the weekly sales, really the only thing that jumped out was another powerful week of bean oil exports. Commitments there have pushed to 1.685 billion pounds as of late February. That represents 105% of the USDA forecast for the entire 24-25 marketing year. So I would expect another strong sales week next week with a few more announced sales this week. I look for a significant shift, probably upwards of 300 to maybe 500 million pounds out of domestic usage and biofuels into exports. On the census sales, both corn and bean exports continue to run just above the weekly inspections data. In next Tuesday's USDA WASDE report, I look for the USDA to raise both exports and corn used for the production of ethanol by 25 million bushels, dropping ending stocks 50 million to 1.490 billion. The average trade guess is looking for about a 25 million bushel cut. Other than that, really, little change is expected from the USDA. I don't see any change in bean or wheat ending stocks. And the only change I have on the South American production is a 1 million metric ton drop in Argentine corn production down to 49 million metric tons. Overnight, Chinese census data, custom data did show their Jan-Feb imports reached 13.6 million metric tons. That for soybeans, that's up 4.5% from a year ago. I think the jump is largely a result of front loading ahead of expectations for this trade war showdown with the U.S. Brazilian basis levels, that continues to improve here in anticipation of greater share of this Chinese demand as it shifts away from the U.S. The difference in FOB price now between U.S. and Brazilian beans is down to about 15 cents after being well over $1 in late January. After weeks of heavy rain across the central and southern Argentina, they look to see a little bit of a drier trend here after this weekend. Still hot and dry for areas of east central and northeast Brazil. Mostly favorable else, however. Inside trade for May corn overnight looks like it's very much stuck to its 100-day moving average, 463.5. Similar situation for May beans. Its 100-day is at 1029. The surge in May meal yesterday was capped also right at its 100-day moving average. That has now flipped slightly higher on the day now. That 100-day comes in at 307.10. Oil also turned slightly higher here, perhaps on a nod to higher energy prices overnight and a big jump in Malaysian palm oil. We just can't seem to get anything going here. Good rains across the Midwest this week should help improve U.S. winter wheat conditions. Thanks for listening, everyone. I hope you have a wonderful Friday and a great weekend.